Hi guys, and welcome to another video. Hope you guys are doing okay. I know it's been a while since I posted. Feels like it's been probably 2 months or longer. Been pretty busy with my life. Recently, just closed on a house, so I've been focused on that. Whole COVID lockdowns and everything, and getting a new puppy in the house has kept me pretty busy. But I just kind of felt the niche to report a video today, because why not? Markets were down, and people like to panic when the markets are down, and that's usually the best time to release information so people have maybe a more stable mind of what they can expect in the coming weeks. The big thing today, we can see that the S&P was down, looks like 0.7. NASDAQ, which is obviously more tech heavy based, it was down 2%. Dow Jones was down 0.25%. The big reason why about this is stimulus talks basically flattened out. We look over here. This is just an article from Yahoo. Stimulus talks between Mitch McConnell in the Senate and Nancy Pelosi for the House has kind of stalled. They haven't really made any progress. And as the deadline of the end of the year, last day of Congress, if I remember correctly, is either the 17th or the 19th. If they don't solve something by then, chances are they're not going to. And if that's the case, we're not going to see another stimulus, at least not until January 20th when the inauguration happens. What does that mean? Well, people see that as a negative sign, so as a result, they sell their positions. What it shows is that there's already been a significant amount of the market has been priced into stimulus talks, and when they don't go according to plan, it causes them to fall like this. If you see my portfolio over the last week, it hasn't had a lot of growth, just very flat. And then obviously today we were down at one point we were down 1.5% basically, but we recovered it all, or at least part of it. And in time, we will recover it all. I'm not really too worried about it. If we go to a week chart, we saw that just a second ago. A month chart, we're still up 4% on the month. 3 months, 6.65%. I will acknowledge that my portfolio has been slightly lagging the S&P, ever so slightly. I think I'm being partially beat out. Part of that's due to the fact that I was a little bit heavier in cash. I've recently been closing out a lot of my cash positions, but partially is because one of my biggest positions is in a company called Alibaba, and if you track anything about Chinese stocks, you know that there's a bunch of antitrust laws going on in China right now. So as a result, that stock has performed very poorly over the last month or so. It's still up significantly since I bought it, so I'm not really looking to sell the position. I don't think Chinese stocks are going to get delisted. I just think that people, when they hear about news like that, they panic. Just like they always do. If they don't get a stimulus in, though, unfortunately, we probably will see a continued decline in the market. It's normal, and honestly, the fact that if we go to even a year chart, we see that we're basically sitting at all-time highs. These are the highs pre-COVID, February 19th, and these are the highs now. So obviously, we're outperforming an annualized return of 7%, which is my only goal. But the big thing for me is just take advantage when stuff like this happens. Every time the markets fall, people will always panic. People always say it's the end of the world and everything's gonna crash, and sell everything, stick to cash. But it's never the case. And so the key is when there are opportunities, when we do get pullbacks of 10, 15%, when you see the market fall like this, that's the time to buy. It's scary and it's not easy. I remember even back in February and March when the market was declining, it did not feel good when I saw my portfolio. And some of these days they were 9 to 10% swings. And it was very uncomfortable. And even as someone like me who enjoys investing, enjoys seeing the markets decline, it does freak you out, especially when they're big like that. I don't think we're going to come to another large crash like this of 34%. I think that we could see a 5% or a 10% decline over the next month, which would put us right around the same place we started November at, because we had a killer month in November all around, especially those sectors that were beaten down, like cruise lines, airlines, companies like that really started skyrocketing. Oil is a great example. They skyrocketed in recent months. So like I said, if the markets keep falling, it's a good opportunity to buy. A lot of people say, oh no, this time is different. We're going to fall 30%. We're going to fall 50%. But it never happens. And ultimately, those people are screaming that the market's going to crash. And then when they do crash, like they did back in March, they yell that it's not enough and it's going to continue to fall. And then it doesn't. And then when it starts rallying, they call out saying that, oh, this is it's a false rally, and the market's going to fall another 20-30%, but it usually doesn't. And as we see, the markets didn't fall again. It's just important to be consistent, to invest every week, and know that when the markets do fall 5, 10, 15%, those are buying opportunities. Those are chances for you to get into positions at discounts. If you're not comfortable buying individual stocks, it's a great time to buy ETFs of any kind. But for me, I really enjoy expanding positions in individual stocks during crashes, or at least pullbacks, just because they tend to fall faster than the index. And when that happens, it gives you a better opportunity that these companies are going to bounce back, and why not take advantage of the short-term discount. So yeah, some new positions for me to kind of update people if anyone is actually interested. I recently started a position in JD.com. It's not the biggest position I have. It's a very small position, but I did start a position in JD. They just had a really good pullback, and I've been tracking this company for a while. They're a Chinese stock, for those who don't know. They're an internet company. I think they're going to continue to grow, and I saw, the dip and took advantage of it. Another company that I'm looking at that I haven't started a position is Logitech. If you're a gamer out there, you probably know what this company is. They've been killing it this year. I mean, you look at year to date, they're up 102%. Barely fell back in March, and they've just been climbing. They're a super steady company. But even with this amazing rally, if you look, their earnings are really cheap considering the broader market. Like a price earning ratio at 22 with this kind of growth, and it's steady growth. It's not crazy. We did see a pretty big pullback beginning of November, but we've rallied that back since then. And I think that on a coming dip, this is another company that I'll probably expand into. I just like their consumer cyclical. Their business model doesn't really change with COVID. In fact, it only amplifies. So I think that over time, this is going to be a great company to invest in. For me, not for anyone else. I'm not giving suggestions. But for me, I'm looking forward to getting a position here. I also, I add positions every week to the semiconductors. I use the SMH. Let me see. It's the same thing as the PHOX. It's just a different company that owns it, but it basically tracks semiconductors like Nvidia, Intel, AMD, all those companies. And I've just started buying in every week. I just think it's a good ETF to track as well as to consistently invest in. It grows nonstop. It doesn't ever really seem to slow down. Just pull this up. SMH. I mean, we're just gonna go to a 5-year chart just to show you. I mean, this I just started this position this year, and I'm already up 20%. But I mean, you look at the growth, almost 300% in 5 years. In the last year, it's up 60%, and I just think that it's a great position for those who want a little bit more exposure than just a broad market index fund, and it allows you the ability to buy into something that's a little bit safer, still get the diversification. Diversification as in the individual companies, not as in sectors, because you're investing in a subsection of a sector. But I think that it's going to play out in the long run. And but yeah, so that's kind of it. I don't really want to make a super long video, and I love to ramble, and I think that I've rambled long enough. So I hope you guys enjoyed. I do plan on making more of these videos. I get discouraged sometimes, and so I'm just trying not to do that and just kind of put my best foot forward and just keep doing it. Anyways, hope you guys enjoyed, and hopefully I don't take 3 months to post another one. Cheers.